link. Oh, I don't need that.
Levi Strauss, 14. Adjusted earnings of 34 cents. The estimate was 30 cents for Lima Echo Victor India. Revenue of $1.5 billion. The estimate was 1.192 billion.
Mute.
Lima Echo Victor India. Q3 gross margin of 61.7% for Levi Strauss, LEVI. Shares of Levi selling off here, Levi Strauss falling to 20.
You have APLD
Dollar
out in number.
at the lows, now bouncing a bit. Going down report, LEVI.
I don't need this anymore.
Lowering their low end.
YDDL.
Let me mute some stuff over here. Mute. How's everybody doing? Thank you, Mario, for the mic check. Give it a minute. Let some people straggle in a bit late. The other earnings, you had Levi. Nobody really cares about Levi. Weakness. What's this look like, though? Let's see. Oh, it's been strong, Levi. Interesting. I remember got hit off the tariffs. That was a concern. Let me get some stuff off here. Oh, that's good. I don't need anything else. And APLD, this actually was pushing higher off the Microsoft news again today. So it's had quite the run higher. Over the weekend, I got to play around with this computer. This is the computer I usually broadcast into the room, into the steam room on, and I don't really touch anything on it. But I got to kind of like update this trading view and stuff. I haven't done that in ages. What's up? What's up, everybody? Did we play AMD when? Today? Or just in general? I think a few folks caught the AMD move whole. If you're talking about pre-gap, I did not. But you know, it's the room is not, well, I won't say a lot. There are times where we get excited about a particular name and a good portion of the room is on it. But you got different type of players, you know, especially myself and a lot of people in the room. A lot of people in the room are solely options players and play mega cap liquid names. And where, you know, I enjoy playing the underbelly of the market on the equity side. So get different type of players in the room. All right, so let's get started here. What I'm going to do today, because we're going into next week is October OPEX, and we get earnings underway. You get some big banks reporting next week. You got Taiwan Semi, TSM, reporting next week. ASML, another big chip name out of Europe. So you get some decent names reporting numbers next week, and earnings season is officially underway. So things get quite messy regarding our edge in particular. What I solely pay attention to in the steam room, flow, sweeper activity. You get a lot of earnings positioning, hedging, rolling. So while we're coming off a really nice place of where sweepers were providing quite an edge, we're kind of going to lose a lot of that edge going into next week. So again, we'll talk about it for Steam Room members. We'll talk about it more on Sunday. But it's just, you just don't want to rely on this type of flow as a predictor of what earnings are going to look like in these names, because it has nothing to do with that, right? Nobody can predict the reaction to earnings in all of these names. What you're likely going to see, if the momentum continues to be bullish, you're likely to see all call buying in everything, all these names. And the reason why is these are all names that have been catching call buying for the last several months now, and funds are adjusting positions into earnings. So I think it's a good time on this webinar, and again, we'll talk about it more in depth on Sunday with members, to kind of look at the market as a whole and just get a gauge on what I think is a lot more important to pay attention to as we get through the first few weeks of earnings. The flow is going to usually clears up after you get that heart of an earnings season, we like to refer to it as, where some of the bigger names like Apple and Amazon, you get that one last week where they all report. It's usually a 2-week period. Once we get through that, you really start to see the flow clear up gradually each and every day. But until then, what I like to do a lot of times is take a more extremely more nimble approach, focus on intraday opportunities. Again, I'm not going to get rich. I'm not going to break the bank intraday, but it gives me something to do. It allows me, one, more importantly, I think that's where solely the edge is off the flow when you're in this type of environment. It's all intraday momentum. So that's one. And two, if you can find a way to grind it out, make some money on an intraday or extreme short-term basis and get through kind of the heart of earnings season, I think that's the best of both worlds. At the same time, you can take a step back with a clear mind, clear head, not much of a bias, and pay attention to some of the more important signals out there instead of all the earnings noise, because that's where a lot of the rhetoric is going to be, right? You're going to hear CNBC, Bloomberg, social media, all talking about earnings in some of these beloved names and the reaction to the earnings, where a lot of times some of the more important signals are kind of underneath the hood, as we like to say, in other names of the market, right? Some early rotation signs, momentum signs, stuff like that. So what I want to talk about today is a couple things. One, I think it's important to acknowledge, because again, the easy way, and I think the more popular way to people to talk about this market, especially now, is the market as a whole, right? You hear, are we in a bubble? We're not in a bubble. We're in a bubble. This is 1999. This is not 1999, right? And I think you're getting the whole entire market kind of thrown under one big umbrella where because that couldn't be any further from the truth of what's going on. I think, again, off the top of my head, if I was to kind of guess at it, I think you got 3 different markets at play here, at the least 3 different markets, right? What I mean by that, you have kind of these AI-driven large cap names, right? So think of, I would label them as quality AI, right? Names we all are aware of at this point. They are growing exceptionally. The earnings are there, and they're being driven by earnings growth. Okay? They're not being driven by solely hype. They're not being driven by solely a story based on the future. The earnings growth is there, and it's a big driver of these stocks, right? So that's one market. And I think the problem is everybody just assumes the rest of the market is in that market. And that's obviously not the case, okay? Then what you got is what I feel is the hottest part of the market right now, where a lot of us have been, let's be blunt, killing it over the last, I would say, at the least 2 months, where a lot of the more aggressive flow has been. and percentage-wise where all the big money, big opportunity has been, right? And that, again, to put a label on it, I would refer to it as more kind of these speculative niche theme type plays, right? So what do I mean by that? Again, all names you guys have probably played over the last couple months several times. And Oklo, some of these quantum names like an RGTI, right? I'm trying to give the more popular ones, not some of the more recent ones, so everybody can understand what I'm referring to here, right? So these type of names, where the majority of these names have barely any earnings, if any. The majority of them have no earnings. Some of them have no revenue. I'm talking about peanuts as revenue, right? So they're obviously speculative. They're obviously based on hype, based on story, and based on what we may see in the future growth-wise. Because it's obviously not based off what we're seeing now. They're not being earnings-driven now because they have no earnings. Okay? Unlike that first part of the market I was talking about. Okay? So that's, I think, a second market that you have to take a look at, and where I think the majority of the more recent heat lives. And the third market is everything else, which has been, a lot would say, in a bear market, which a lot of these companies are in industries that have been basically almost like in a recession while all this is going on. Okay? So think of cyclical names. Think of names that rely solely on economic growth, right? Home builders, right? A Home Depot. A lot of these names, okay, or interest rates, right? Economic growth or interest rates, they kind of rely on. A lot of these names have done nothing, zero, over the last few years, okay? While AI, tech, and a lot of these hot theme groups have exploded at times, okay? So you got really two parts of the market that are hot, one that has been explosive of late, and then you got a third really large part of the market that has done absolutely nothing, okay? Without looking at the market through those lenses, it's almost impossible to kind of get a gauge on, where sentiment is at, where the risk is at, right? If you approach the whole entire market, right, the same way, you could see how you can run into significant trouble on either side, whether you're getting long or short. Okay, if you participated in the third market, which has been underperforming up until recently, we've seen more participation, right? Obviously, sentiment positioning there is nowhere near as full as some of the hotter groups out there. Okay, so the reason I bring that up is because I think what we're seeing now, right, and what we've seen even in the past, is those first two markets that I refer to, which is quality AI and speculative AI. They kind of been going back and forth at times via leadership, right? So you'll see like quality AI names rip for a few months, and all the money's going there, and kind of these speculative names lay dormant, and the momentum dries up, and they kind of chop around, range bound, right? And then you get kind of rotation where these quality AI names outperform, they're up significantly, and now some of the more speculative names take a leadership role, right? And a lot of times they could be catalyst around it. The Fed's cutting rates, right? That gives them a boost. Obviously, there could be catalyst around it, but you've seen basically the majority of the time these two hot groups rotate back and forth and kind of keep things going in the market, right? There's always money to rotate into. And then when kind of both of those groups get cooked in a sense, right? Or if there's negative news around that group, you'll see money rotate into that third underperforming market, right? and you'll see them outperform and do well for a short period of time. But it's been mostly the two markets related to AI, tech, and some of these hot themes out there. Okay, so that's what I think we're dealing with here, right? And I think right now, if you ask me, kind of, are we in a bubble, or is it remind me of 1999? In some ways, yes. In some parts of the market, yes. But in other parts of the market, absolutely not, right? So there are several different ways. What I'm getting at, several different ways this can all play out. Everybody looks at it as, oh, everything's going to go up and down together, right? Like it should. And I don't think that's a given, no matter what we see in the future, right? So let me try to explain what I mean by that. You can very easily see, okay, these speculative names, and I think this is kind of the biggest risk out there, right? In my opinion, based on what we're seeing. These speculative names, like an RGTI, I think are at risk of, at the least, running into a high similar to March, April of 2021. Okay, may not be a major top in this market like it was back then. Okay, and just to refresh everybody's memory, back in March, April, May of 2021, these type of names, SPAC names, EV plays. Remember how the EV stocks were hot? Space, SPCE, Plug, Cathy Wood names. All these names were going bonkers. Okay, and then they made a high. GameStop was kind of the blow off, if you remember. They made a high, and let's call it April of 2021, and never made a new high after that. Okay, while they actually topped out then and didn't necessarily crash right away, but ultimately they rolled over from then, months later, the rest of the market didn't miss a beat. The rest of the market continued higher, had maybe one down week, if that. I think it was just a couple of days from what I remember. Okay, and just continued marching higher. So quickly, like, look, if you look here, right, just so you guys get an idea, because nothing's better than pictures. Okay, GameStop, if we go to a weekly, I'm referring to this, right? So this is in February, okay? So say February, March of 2021. This is February, March of 2021 on the chart of SPY. Okay, so while a lot of those speculative names, hot names, right, and there were a lot of them. I don't know if you guys remember. They were SPAC, right? No revenue. Nobody even knew what they did. Nobody even knew what type of company they were. They were changing symbols a week later, but they were quadrupling in days. It was insanity, right? And then you had other, like, what was it, like legit hyper growth type names, right? They were in the right industries, EV stocks like Rivian and the LiDAR names. You had a million of them. Okay, so they were all based looking forward in the future of this crazy, sexy growth, but they had no fundamentals, zero. It was all story. Okay, all that stuff basically topped out here, and the market continued higher. And honestly, that's in what I'm seeing right now, especially if it continues from here. I think that's the risk right now. Okay, what kind of effect it ultimately has on the market on a short-term basis, it's really difficult to say ahead of time, right? Maybe it takes the market down for a week or two, but in my opinion, based on how under-owned and under-positioned funds and institutions and players are in everything else, okay, there's a high probability that money is going to rotate into these groups off that weakness. Okay, And at the same time, I think while they could rotate into that third market, which has been a lagging, underperforming big chunk of the market, I don't think the quality growth type names will necessarily top out with the speculative names. Why? Because they have their earnings to back them, right? The earnings will continue to drive those names. So if the earnings still continue to grow, right, these names likely hold up and continue to do well. Now, they likely slow down because they're up so much, and obviously they're not underexposed like the rest of the market, but they don't have to necessarily mirror the speculative name. They shouldn't, okay? Because they have fundamentals, right? So again, I'm not smart enough to predict whether the high we see in the speculative names ends up being a major high like we saw in, let's look at this, right? This probably shows it the best. What is it? ARC 2Ks? Hold on. I think it's 2Ks, right? Because this kind of shows it the best here. Let's go to daily. Oh, come on. All right. So here, 2021, just to get an idea. All right, there it is. The circle's still up there. Here's where ARC topped out. Right? So you didn't have a crash and burn immediately. Look how kind of this lost some momentum and then did this while the market, the rest of the market continued higher. So it wasn't a complete debacle. Now, some of the more speculative names that really had nothing to them, right? Like they were driven off just retail pump and crap like that. A lot of those crashed and burned pretty hard. But some of the other names really didn't crash emphatically. They did exactly what you see in this ARC chart here, right? The momentum stopped, slowed significantly. Okay? So again, I don't know, and what I mean by this is I don't know that this high, whenever it shows up, is the top in these names. There's a good possibility of it because of how much they run. I mean, you got crazy moves out there right now. Okay, so if it's not a major high, it's at least probably some lengthy digestion that needs to take place. But to me, that's the risk right now. That's where all the speculation heat, that's where it feels like there's a bubble, right? It feels like 99. That's where that feeling is coming from, in my opinion. It's not coming from the entire market, especially of recent. All right? So this is what I think, one, personally, I need to be prepared for this, right? I need to be on the lookout and aware of this, one. And then whenever it does show up and start to play out, be prepared and ready to see when and where that money is starting to go into these other places. Now, again, and we've been talking about this for a while, to me, the big opportunity is in that third part of the market, which has significantly outperformed. Now, granted, I don't even think we've seen a little more participation there. Small caps have acted better. Some of the cyclical names of recent have acted better, but we really haven't seen any aggressive rotation into that area of the market. It's been very selective at times, momentum, short-lived. But to me, like, that's where I think the big risk to the upside is in that part of the market, because what you had working against that part of the market, the legitimate reasons why that part of the market wasn't working, is starting to turn. One being possibly the Fed, right? They rely heavily on rates, right? And the Fed cycle, the cycle the Fed is currently in. And now if you do have a rate cutting cycle underway, right? Because what everybody's looking at is they're looking at, okay, the Fed's going to cut rates, and then you're going to get Trump guys in there, Trump's boy in there next year. And then you got that stimulus alongside all the other Trump stimulus. To me, that's where you see the biggest bang for your buck. Isn't that third part of the market, those economically sensitive names that nobody owns, right? That's where sentiment looks like you're in a full-fledged bear market. It doesn't look like 1999 in any of that area, right? So you get those things to start to turn and benefit that area of the market. Obviously, you can see why that can be a huge opportunity. Okay, but it hasn't really taken fold yet, right? It slowly has gotten underway. I guess it maybe is the better way to put it. Okay, but for me, the big risk and timing it is very difficult. Sometimes easier than others. In other words, you can see some signs of it developing, but it's not a given that you do. And what I'm referring to is when momentum starts to wane out of this area of the market. Because what I mean by that is a lot of times you'll see you think the momentum has dried up, right? You see some selling or you see some consolidation, and then they rip to new highs again off some news. And if you're short, you get run over, and those shorts play a part in more upside, right? And then you get another mini leg of a run that there had no business being. So it's really difficult to get a gauge on. But to me, this is where the big risk is, right? Now, I'm saying that, right? And those of you know I enjoy trading these names. I mean, the majority of names that we've made a lot of money with over the last couple of months fall into this category, right? So I just want, for anybody who's new on here, not to think I'm some perma bear raining on people's parade. You know, I would love for this to last forever because this is where I make all my money, right? But at the same time, I have to be a realist and, look at the signals and signs in front of me and understand that, okay, even if we're not there officially yet, we're getting pretty close to the point where I want to change my style on how I'm trading and approaching these names. Does that make sense? Right? And that's kind of what we've been discussing over the last few weeks, the last couple of weeks. Right? So just to get everybody caught up, a lot of these names early on in the rally, these were names that I like to buy some. I don't mind being early on them, especially at nice spots, and I wanted to hold on. Right? I want to hold. It's almost like I have trouble holding a lot of these names, and you guys probably can relate from experience. And I make it a point to remind myself to try to be patient and hold at least pieces of these names because of the tailwind at their back, right? So that's a few months ago, okay? Now, while these things still have a ton of momentum, as you can see, and we're still seeing, some flow in recent new names in this area, which allows us to still play. What I've changed predominantly is that I'm not looking to tuck away much of any new weight at all, right? So as a matter of fact, not only have I been making a point of doing that, I've been trimming a lot of what I have been holding, right? And that's what kind of we've been talking about in the steam room a lot. Like a lot of names that I've been holding on to the last couple months, even things I've left behind, right? Kind of runners in a sense. I've been trimming a lot of that stuff as well because of how much they've appreciated over the last couple of months. Okay, so in this area of the market, no doubt, I want to be a lot more nimble. I want to be a lot more tactical, right? I want to take profits when they're there, right? Again, for the most part, some names you may want to give a little bit more wiggle room than others. But the last thing I want to do is continue to add weight on the long side in this speculative area at this point. Okay, I want my net exposure levels in this area to go down notably. Okay, that doesn't mean I can't. There might be one name I want to hang on to a little bit longer. I may decide to do that, but around that, I'm trimming everything else. You understand? So that's the approach I'm taking now in regards to these type of names, specifically, especially, okay, because of the potential risk of us running into kind of a March 2021 high, okay? And again, for everything else, again, we can even leave that for a discussion on another webinar, because I don't see the risk that I see here in everything else. Again, on a short-term basis, it may have an effect on the market, right? So that's why I'm not too eager to kind of buy and tuck away anything at this point. I'd rather see a pullback and then decide to do that in some other stuff, other areas of the market that don't fit this bill, okay? But I don't need to make that decision now. You understand? I don't need to make that decision yet. And now going into earnings season and OPEX, that's even more the reason why I don't have to make that decision. It buys me a few weeks, a month before I need to make that decision. Okay, so that's why it's not even a focal point of mine. The focal point of mine here is to try to still take advantage of the momentum here, especially if there's new aggressive activity. And we'll talk about that in relation to flow. For those of you in the steam room, I think you guys got an idea of what I'm, because we've been talking about it already. But I want to still participate and try to take advantage of the momentum while it's still around. But I definitely want to cut my weight down in these areas with the risk of something like this showing up sooner than later. Right? And here's the problem. I think if, like, a lot of you rebut me and say, well, this could continue into the end of the year. Who am I to say it doesn't? But I think if this continues into the end of the year without a legitimate rinse in these speculative names, I think they're done. I think that will be a major, major top in these things. Because you're talking about stocks up 20-fold. Forget about what multiple they're trading at. You got people crying about an AI bubble because we're trading at 20-something times earnings. These things have no earnings. They have nothing. You understand? So it's a big difference between the two. All right. But here are some of the things. Again, I'm going to start with some of the things potentially showing some early signs of risk. And then I'm going to eventually get to the stuff that we're seeing currently that still tells us overall the market is still net bullish. Right? The complete opposite. So these are credit default swaps, right? And just think of credit signals, credit market signals in general. Okay, what we've seen recently here is some divergence. Okay, a lot of times the best rallies, the cleanest rallies in equities, think of risk on appetite, happens when the credit signals we pay attention to confirm the upside. Okay, from time to time, after a rally kind of gets long in the tooth, you start to see some divergence where the equity market's still showing risk appetite and moving higher, but you're not getting that confirmation from the credit market signal. And we're starting to see a little bit of that, okay? Now, these are swaps. They're inverted, so you can see the correlation, all right? And you can see how the market has been grinding, slow melt up of new highs here, low correlation levels, right? The participation levels, very random and scattered. And you got this divergence that's been developing. Okay. Again, a potential early signal of some sort of rinse. Okay. This is what we're looking at here. This is a credit spread proxy we like to look at intraday, right? Basically, same premise. Some of the bigger, larger pullbacks, what you usually see, you see a buildup of divergence. Case in point here, you had divergence for a couple of months, then you had a healthy rinse. The more recent pullback earlier this year, right? Credit divergence started from the end of last year, all the way up until we pull back, right? Market new highs, there's that divergence, equities roll over and catch up. And here, again, you see a very, very light divergence just to start, but equity market higher, new highs, and you kind of getting credit spreads flatten out a little bit here. Okay. VIX, which some of you have been talking about, you're not getting VIX push higher. You got bears who want VIX to push higher. That hasn't happened. Okay. But at the same time, while equities continue to grind higher, there's been a bid in VIX, right? There's been a bid in VIX. Now, there are several reasons probably why. You have offside positioning in VIX, meaning you got some heavy short exposure in VIX futures. Okay. Sharpies, the last time we heard from them because of a government shutdown, we don't have Sharpie information. Okay. Maybe that's why I'm getting a little spooked. But Sharpies are long VIX futures. They have been. Okay. So that's divergence, right? Even though it's not any major divergence here yet, you're starting to see divergence where, as they say, vol up, spot up type action. Okay. And same with VVIX, a little less on the daily time frame of VVIX, but you can see it here kind of, we've been looking at it more on an intraday basis as well. Okay. The majority of these VVIX divergences have resolved pretty quickly. So in other words, here, equity market higher, VVIX, this is inverted. So this is VVIX turned upside down so you can see it. Okay. VVIX, right? You see the divergence starting to go higher while this equity is still pushing higher. There's your rinse. Right? Same here, and you get a rinse. Same here, and you get a rinse. Right? So what we have now is these rinses haven't resolved the VVIX problem yet. Right? They're these short-term rinses. Right? Here's you got the VVIX inverting, heading lower, and we still haven't pushed lower out of this. So again, you got some slight VVIX divergence as well. Okay, minor divergences, minor. I'm not saying they're major. Okay, this is correlation, which we talked a lot about the last couple of weeks. Okay, you see it every day in the market. Look today. All right, Hughes down, Meta up, Amazon up. Now, this environment is not the worst environment in the world, and I'm biased, but when you have sweeper activity, okay, you see sweeper activity at a decent spot, it helps find where momentum may be, right? Because if you're just randomly picking names being higher because the market's higher, you know, you've obviously got chopped up and lost money. Okay. But like I give an example, the majority of speculative names we've seen flow in have done extremely well of late, right? But even large caps, Meta caught some action last week into a little weakness, into a downside liner, right? I think a few of you in the STEAMROOM played it. You got a nice little bounce today, right? There are trades there when you have sweeper activity. That's your edge, right? Now we're going into earnings season and monthly OPEX. The edge goes out the window. Okay, that's kind of the problem here. The edge goes out the window. All right. But bigger picture wise, you have to deal with this randomness and really just an unhealthy feel in the market, participation wise, because these things are just so low. Right? Correlation so low. And in simple English, what that means is you have a higher probability of at the least, an interim VIX pop, which will be a pop in correlation and equities rinse. Okay. You have a higher probability of that now because of correlation being low, on top of a higher probability that you end up getting a pretty decent pop in correlation because it's been so low, which will also mean a big pop in VIX. Okay. Again, higher probability doesn't mean it comes right now. All right. But higher probability means there's a higher chance of you getting caught in it. And that has to factor into the equation. Okay. The worst thing, in my opinion, would be a continuation, kind of what we saw back here. Okay. This thing starts just, again, a continuation, more of the same. We continue to see that, like some of you think, into end of the year. Okay. That usually doesn't end too well. All right. That's not a good thing because I think the risk doesn't go away, is what I'm saying. Where are we here? That was correlation? Yeah. Okay. Here, now this is, I think, one of the better signs out there. Maybe we want to keep tabs on over the next couple of weeks while we're in earnings season. This is the move. So think of the VIX of credit, the credit markets move. And this has been relatively tame here. Right? So even though we're starting to see some divergence show up in some of our credit market signals, again, they're early signs of divergence. We're not really seeing much divergence yet in move, right? So something to keep an eye on. Something to keep an eye on. Maybe it does show up, okay? But so far, little if anything, as you can see here, okay? When this move explodes higher, it's taking down equities, all right, at that moment. This is another thing, right? So again, this has been bullish for so long. This is above my pay grade. You guys, probably those of you who follow it, know more about it than I do. I'm not pretending to know about it. Okay, I just follow certain a couple people for liquidity and keep me up to date on liquidity because I think it plays a big part, especially in the speculative parts of the market. All right, and I don't go any deeper than that. I don't want to go any deeper than that. All right. I'm not a liquidity aficionado. I just want to know if there's any signal for equities in addition to everything else I'm looking at. Okay. This has been a huge bullish signal for equities, especially speculative equities. Right? Runaway up trend since April, kind of ran into a little choppiness here. And now we got a little bit of a rollover, maybe similar to this here. We'll see. But again, correct me if I'm wrong. If I'm not mistaken, back into those 2021 highs, this rolled over. Again, I may be wrong. Okay. But if I'm not mistaken, as the speculative part of the market made highs in 2021, liquidity rolled over. Now, it didn't mean a whole lot for the rest of the market over the next few months, but for some of the speculative parts of the market, it meant a lot, momentum-wise. Okay? So again, something to keep an eye on over the next few weeks as we get through earnings season. Okay? This is the point I'm trying to make here, guys. Things that I'm keeping an eye on over the next couple of weeks until flow comes back to being an edge for me. That's the point I'm making here. Okay. Things that are starting to look interesting. This is from one of the sources I follow for liquidity, Cross-Border Capital. Many of you know him. He's popular on social media. And he's talking about something similar there, right? Again, repo market. There's ties to that. I get it. I don't want to understand more of it. That may sound ridiculous, but it's not my game. You understand? If I'm being told by people I trust that liquidity might see some stumbling block here, right? And it's showing up in some of the signals, that's all I need to know. That's all I need to know. Okay. And this is what this is kind of showing here. Liquidity flowing after being so robust. All right. Getting back to the speculative parts of the market, this is what you're seeing. Okay. Net opening activity in the options market. All right. The last time you saw something similar to this was those highs in 2021. And you're seeing something very similar to that now. All right. You look at this chart to the right. What is that? Small traders. They're the ones kind of pumping this thing here. Okay. So this is good too, because I think the popularity of the option market will allow a drawdown in this area to be quick. Okay. I think, like, in other words, I think when these things cool, the initial violent sell happens quick. Now, after that, kind of what we looked at in 2021, they may chop around for a while, but as far as having an impact on the rest of the market, because of a lot of the buying is in options, they're going to get washed out pretty quick. They're going to get washed out pretty quick. Okay, but you can see some speculation starting to show up here. Again, they're not buying cyclical names. All right, they're not buying home builders. They're not buying small cap value, right? The names they're buying in the makeup of this, why this thing is hot. And this is the other thing at play here, right? You got kind of that systematic crowd that's been long and strong for quite a while. They're all full tank now at this point. If you get kind of the speculative part of the market to weigh enough on everything else, and you start cracking some CTA systematic fund levels, maybe a short-term problem, right? It may be a short-term problem. This is SPX with some of the more up-to-date selling thresholds, pivots from Goldman. Okay, so this is kind of the intermediate one here, 6,500. So you still got through the glass half full view here. You still got decent wiggle room here. All right, you got some decent wiggle room. But once you start cracking this level and then that level, this level, they start to get aggressively short. All right, here they start to unwind long exposure. They get kind of that waterfall type selling that it can lead to. Again, these levels change. And what happens, a lot of times when you get a grind up like we're seeing now, the market slowly grinds up and these levels start to creep up. And I think we talked about this, right? A lot of times what you see, you don't necessarily see these levels crack in all one shot without some shock, right? What you see is something like this develop. Right, gets a little choppy, and then if they crack, bloop, you get something like that, where the level pushed up a little bit higher, and then they crack. So you almost get a period of kind of a warning period here, or a preparation period. Right? Without some shock, that's usually how they set up. Okay, if they're going to trigger, again, I think you can get away with kind of them not triggering if this speculative part of the market starts to cool now. It doesn't, even if these names start to cool, not all at the same time, which we see a lot of times in this market. They can happen in parts. In other words, the quantum names go into hibernation first, right? Then you see kind of the utility spec names go into hibernation after that. So it doesn't have to all happen at once. That would be probably the best thing in the world if you're bullish. Okay, when they all happen at once, that's where it could potentially have an impact on the indexes and everything else. Okay. Do I have anything else here besides? So this is kind of the overall market view on positioning, right? That we kind of looked at. There's no major change here. You got the systematic funds that are still long. That's been the case. And you got, the discretionary professional money, right? That's been on the sidelines, kind of remains on the sidelines, right? They don't participate in the speculative names much, besides some hedge funds shorting here and there. Right? I'm sure they participate in a few of them, but you know what I'm saying. Right? A lot of it's retail driven. And a lot of these macro funds, they haven't got aggressively long in this market in a long time. Now, some of them have started finally put some money to work, these long only funds, these macro funds, because the Fed is now cutting, right? So maybe that changes, but at this point today, they're not long much of anything, right? That they're long certain names like Microsoft. All these funds, every fund out there, right, already owns Microsoft. If they're not in Microsoft by now, they probably got fired and lost their job. Let's be honest. All right. So all those names are already owned. The only way they add to them is if they get a pullback or take off exposure and then re-add it at some point. The majority of these funds already own a lot of those names. It's everything else that they own very little of. And that's why you have this kind of lingering. And here's hedge funds, the sentiment trader indicator we look at, right, in individual names and equities. You can see they actually even tried shorting a couple weeks ago and quickly got squeezed. And now they're back to the zero line. We haven't seen anything even like this where kind of they got forced into the market, and that's not even that much long exposure. You see here how they kind of get forced to chase. Then eventually maybe a market tops. They haven't had much interest at all. And you probably see that change if the rest of the stuff out there starts to participate in a larger way. Right? I mean, we know that hedge funds were short small caps. They're not even long small caps. They're short to an extreme. Okay. So that being said, my favorite indicator, big picture indicator for the whole market is obviously Sharpie data, COT data, whatever you want to call it. And because of the government shutdown, we don't get it. Okay. I don't know when we're going to get it again. I have no idea. Obviously, the government shutdown has to end. And I think the last time I remember, I think it was a week or two after that before we got it. So I'm in the dark here. Yeah, I'm in the dark. So last update. Last update was, you see everybody complaining there. This it? Oh, this is S&P 500. So this was the last update. Now, this is a couple weeks ago. Tomorrow, we're not getting an update either. You understand? Because the government still shut down. So I don't think we're missing anything major here, but I don't know. I have no idea. So I hope this doesn't go on too much longer here. You know what I mean? Obviously. Because I think, again, this is one of the things that really gets us up to speed on the overall positioning in the market, right? Do those shorts finally get squeezed out completely in the Russell? If they do, you might have hedgers start slapping on hedges overall. Right? And if to me, once I start seeing that, obviously I take additional precaution. That's where I want to be in a higher cash position with everything else I'm seeing right now. Right now I'm not there yet because Sharpies are still net long. Hold on, I gotta put the air on this weather. I froze my rear end off this morning, and now I'm dying of heat. Hold on. It's crazy weather. All right. So listen, in simple English, yeah. Somebody get Trump on a horn, please, Drew. So in simple English, here's what I'm trying to do, guys, so you understand. Okay. You guys know already how I've kind of become a little more conservative, cutting down existing positions and trying to be more tactical. Right? Because now, solely because of earnings season and October OPEX next week, I'm really going to become extremely selective here. Like anything I play predominantly is going to be intraday. Maybe I decide to hold something for the next day to see some follow through. I'm going to try not to even do that. What I'm going to do is I'm going to buy myself some time here, right, for the next few weeks. Hopefully we get Sharpie data back, right? And hopefully this speculative arena starts to cool. And then we can reevaluate, But for the next few weeks, looking to remain extremely nimble. And as far as cutting exposure, I already have cut, a decent amount of exposure. Even stuff like I didn't want to sell. I sold it. TEM, I had 1,200 shares. I sold 500. I got 700 left. But you guys know this is a name I didn't even want to sell that I've been holding from all the way over here. So I've really tried to trim around everything else. The couple names I traded that I bought recently, the most of them I'm out of already. Poet, this one was a really nice one. I sold the next day. I think some of you are still in it, higher, right? Off that crazy flow. What was the other one? CDZI, was it? Yeah. I sold this one, took some profit. And I'm still holding the robotic one, I think, which was down a little today. What the hell is that symbol? Hold on. ARBE. So I'm still in this one, still got some profit here. Had a nice little move. I don't know. Why'd I hold this one of the bunch? I don't. No particular reason. AUR, yes. So these are names I played basically before looking to be more extremely nimble. But AUR, SGHC, those I still own and haven't sold a share in. But again, the other thing to acknowledge, guys, and I could easily lie to you and tell you I'm loading up on all these things because they're going in the right direction. I'm being honest with you. Compared to what I was playing a month ago, I'm sizing down significantly. I'm sizing down significantly. Like I think I told you guys, this ARBE, I own 10,000 shares. It was $1.90. I obviously could have, about a month or two ago would have bought a lot more than that. So again, just so you guys get an idea, I'm being prudent about it. What I'm trying to avoid, you guys know what I'm trying to avoid. And, I think even you don't have to necessarily plan ahead, right? It's not like some nuclear bomb goes off, God forbid, and you get caught in everything. But in options, I think you got to be a little more careful, okay? Because you don't want to get caught with a basket full of these names and calls when momentum starts to wane in these things. Okay? It's easy now to say, oh, when that happens, I'm just going to pull the plug. But a lot of times it doesn't happen that easy to where you're like, oh, I'm getting out of this now and then you get out of everything you're in. You know, you walk in one morning and they're down significantly. Then you get a snapback. You're like, oh, maybe it bounces back here, right? They chop around, then boom, you get another whoosh. And now a big chunk of that premium's gone. So for me anyway, it's always been smart to plan ahead and be early in the preparation, especially if you've been heavy in these things. You know, you've been heavy. Now, listen, if and again, I don't know when these things are going to lose momentum. I'm not, obviously. I wouldn't be here talking to you guys if I knew exactly when that was going to happen. But maybe this continues. Okay, maybe this momentum continues for however long. And, you know, if there's new action, okay, so for example, like if they come and bombard a name like an ARBE, which is a new name, a new setup, you know, I'll play it. The difference is I'm going to be quick to get out of it, regardless, up, down, sideways, crooked. That's the difference. So I'm looking, you know, I'll still participate in the momentum, just in a lot more conservative way. Serve, I only have 1,000 shares of SERV that I've left behind when I owned it in the past. I still have it, the 1,000 shares. I haven't sold that yet. Because really, it hasn't really done, compared to some of the others, really hasn't done anything that great till today. But this is another robotics play that has seen some decent flow. You know, guys, the runners on the equity side, and you guys know, because a lot of you guys did the same, right? Some of you guys have runners like Sahil and Aklo. You know, so you guys know exactly what I'm talking about. But these runners add up. Like think of this. TEM, okay? 1,200 shares of TEM. What's his face? Cypher. I got 1,000 shares of Cypher from when I played it. CIFR. I don't have Irene, unfortunately, IREN. I have HUT, 2,500 shares of HUT. You know, look, like these things were cheap names. You know, that at the time then, I was buying, you know, 10, 15,000 shares, 20,000 shares of, and I left 1,000 behind. But look how much they're up. You guys know this one, Wolf. You know? Wolf, I still got a decent amount of Wolf left. You know, compared to runners, not from what I had. I'm talking about runner-wise. I think I have like 6,000 shares of Wolf. What's another one of these that I still own? Anyway, you guys, Galaxy. Right? We were talking about this in the room. Right? I got 1,000 shares of Galaxy from where I owned it that I left behind. So, you know, some of this stuff, right? If this continues from here, this is the stuff that I'm going to continue to chip away at and free up. You understand? Because it adds up. You know, it adds up. It adds up. RBRK, I still have that, Sahil. You know, and this is something I really don't want to sell. I just want to forget about it. You know, so this is probably going to be one of the last ones I sell if Sharpies get aggressively short or some shit. But I don't want to sell this. So, you know, even the TEM I didn't want to sell, but I felt like I had to here. I had to. You know, even if it goes higher, right? I got some left. I had to take advantage of this move here. I had to. And just, you know, we're just so spoiled in this market right now, especially these names. We feel like, you know, we can't even get a little downdraft in where these things can come in. I just want to be, I want to be smart about it. Soon, I don't. Yeah, you know what's funny? That was one of the first few names I tucked away. I don't have any soon left at all, out of it completely. I don't have any soon left. I'm even out of runners there. So, but guys, there's no, and that's another thing, and you guys know that there's no secret sauce to selling these things, right? That's why, like, I don't even want to tell you guys to kind of, God forbid, I spook you out by accident, or you're like, oh, you know what, Jay's selling, maybe I'll sell too. I don't know anything more than any of you in these names. God honest truth. Okay. The only reason I'm selling is because these things have come a long, long way. At some point, you got to admit you're right and cash in some chips. Yeah, plain and simple. Plain and simple. LWLG. I did not play this one. This one I think called leap buying, right? If I'm not mistaken. Didn't they buy leaps in this thing? I think they bought leaps. Like, look at these things. You see the moves in these things? Like, it's annoying. You don't think me being more conservative now, how many opportunities I'm missing there? All these things are flying. Yeah. They're all flying. But that's what kind of worries me as well. You got all these things. Again, if you remember what happened in 2021, it's very similar to what happened in 2021. You could say the sectors they're in are better, where there should be more hype. And that maybe you're right, but what has to happen, okay, if these things still have room to the upside, in other words, a trend to the upside, there has to be a correction. There has to be a correction. Has to be. Okay? If they don't, it's a blow off top. Right? It's that simple. Like, you see like this, and it's not easy deciphering between the two, but like even here, even if Aklo wanted to go higher, something like this had to happen. You understand? Something like this had to happen after this move from what was that, 16 to 60. And then it came down, right? It based, right, for 3 months, then started to see buying again, and then eventually broke out and has gone higher. But now, this here I'm talking about, this recent run over the last few weeks is bananas. Is bananas, right? So I'll give an example. Like, maybe you guys, some of you weren't around in 2021. I remember I was arguing. You know what's funny? The guy, I'm not even kidding. The guy pumping my gas. Okay, he was pumping my gas at the gas station. All right, and I know the guy. He's a younger guy, and he was telling me Plug was his baby. Okay, and he was up huge in it. I don't know where he is. I think he transferred gas stations. I hope he got out. But I'm just giving you an example. I remember it back then. Okay, this Plug was one of these type names. You remember Kramer had the CEO on CNBC pumping it. All this alternative energy, it's the future, batteries, blah blah blah. Okay, look at this move. It happened over a course of what, a year? This thing went from $1 to 80, right? And at the time, I remember the story is the gas attendant was telling me this was going to 500. Okay, he wasn't happy with a move where I think he bought it at like 30 something and it went to 80. It's going to 500. I'm holding the 500. So later, T. Dang, so even if this, right? And that's what I was telling him. Even if this was going to become some big winner down the line, after a move like this, there has to be a correction. There has to be a correction. You understand? But you see how this got blow off toppy? Look at these gaps. All right, that's kind of what we're seeing right now in all these names. just an explosion over the last couple of weeks. So you want, again, if you like these names, right? If you're in from lower entries, you want to hold, you hold. Okay, that's fine. You hold, right? If you're holding longer term, you got to be willing to sit through corrections. You have no choice. Okay, look, TEM. The only way I could hold it through corrections is because I only had 1,200 shares. Otherwise, I would have never held it. Okay, I would have never held it. But look what I had to fit through. We've gone over this. Look at this. Oh, come on with this nonsense. TEM, few of us bought it here. This rip, Nancy Pelosi got in. Okay, I didn't take it. I didn't sell that. I didn't sell the 1,200 shares. I watched it literally go down from $92 all the way to 38. Okay. Now, if I had a full-size position, I'd be suicidal, obviously. Right? You know, but I had a smaller position that I wanted to tuck away, what I thought was a decent entry, and wasn't easy, but over time, okay, and soon, somebody brought up soon, I did it with that soon, you know. So if you're in some of these things that you believe in longer term and you adjusted positions, you trim down your equity, right? Or you're rolling in calls, which a lot of you have been doing. I'm not talking about that stuff, right? That stuff you got to figure out on your own what you're willing to hold through and stuff like that. I'm just talking about new risk here. You know, new risk. It's really dangerous right now in these things. Really dangerous. Yeah, I mean, look at this thing. Like APLD, okay? This was what, a $5 stock initially when we started seeing flow breaking out? And then you guys in the steam room were buying it again. I remember at 10 here. 10. Right? Now look, gap up another $2 to 32. So, like, where all these things are going to 500, all of them. Right? We all think the one we own and we like is going there. All of us who have different names, they're all going to 500 in a straight line and never going to have a correction. Come on. You know what I mean? Come on. Let's be real. And again, for me, like based on my experience, the crazier they get, initially, the crazier they get, the higher the probability that this is the last pumping them for a long time. And by the way, for those who think that 99 into 2000 saw little stocks like this run all the way to the end, they're mistaken. The little guys stopped running long before. Long before. It was crowding into everything else, and the big guys that popped in 2000. There were little bits of sectors, like I think biotech was the last sector to kind of explode. Yeah, biotech in March of 2000. I know. We still got rate cuts coming, and that's why I don't think we could be bearish overall. But because we have rate cuts coming, does that mean $2 stocks go to 1,000 now? Yeah. I don't think so. I mean, that's just my opinion. I don't think so. Well, I don't think so. I think rate cuts benefit everything else. You know? So, you know, kind of like what we were talking about. I think rate cuts, if you're bullish on rate cuts, the stuff to be bullish of is home builders, regional banks, small cap, the Russell, stuff like that. You understand? We're not talking about small caps here, guys. Some of these are being added to the small cap index eventually, market cap wise. Okay. these are all speculative penny stocks blowing up. They're blowing up. Okay. And again, even if it's not the end of this run, I'm telling you, I'm not smart enough to tell you it's the end of the run permanently. I don't know. You know, who knows, again, what the liquidity situation looks like next year. To Sahil's point, maybe the next Fed guy that comes in after Trump aggressively cuts rates, you know, and sets all of these things on fire. What I'm saying is they will correct. There will be a correction in these things, I promise. And the more they look like they're not going to correct, the higher the probability goes up that this is March of 2021 in these things. You know, I mean, GameStop, you had all these apes thinking what? The stock was never going to go down, right? I mean, now everyone, oh yeah, GameStop, you knew it was going to go down. At the time, hedge funds were getting buried in this thing, shorting it. Right? Look at it. But you know, this was the last one of the bunch. This was the last one. You know? Yeah, I mean, all of them, Sahil. I used, like, back then, you remember, before the last time these things had a pull, like, Oklo was the one. I remember you cracking jokes, like, why are you picking on Oklo? Because Oklo was the only one that kind of was really getting crazy. And that was this here, okay? That was this. I remember, you're like, why are you picking on Oklo? You know, just because the simple fact, the stock went from 16 to 60 in a straight line. Okay, now you have 25 Oklos minimum. Oklos. And then what about all the other ones that are up only 300, 400, 500%? Like, look at this. Okay, you got all these Bitcoin miners. Literally a month and a half ago, when we were talking about them, no one wanted anything to do with them. These things have gone Eiffel Tower on us here. Like, come on, look at this. There's always something when they correct. You know, and you don't even have the grid. Like, I remember when SMCI, that's one stock, was doing this. All right, people making it, oh, but the fundamentals, it's never going to correct because the fundamentals, the growth there is incorrect. They all correct. They all correct. But now, literally, you got all these stocks. Every stock, I've traded a lot of names. Every single one I've sold is at least 80% higher. Minimum. Every single one. Every single one. That doesn't last forever, my friends. Unfortunately. I wish it did. It doesn't last forever. I mean, look at all these things. Look. I was getting trolled for buying this. The funny thing is, every stock I got trolled for end up being a huge winner. Right? Like, this was a stock that couldn't get out of its own way. Neo, I got trolled for. Okay? Plug. Like, these are stocks that are only up like 150, 200%. These are they're not even considered like, you know, oh, it was only up 150%. That's it. Yeah, I mean, well, forget it. Look at the run here, though, recently. Like, you know, 90 cents, at least that was months ago. triple. Okay? Triple. Yeah, see, the thing is, there's a big difference, though, like between a lot of these things and PLTR. PLTR, the fundamentals have been driving it. You understand? PLTR became a profitable name. They were losing money, became profitable, growing. You understand? The profits started driving it. Before the profits were driving it, PLTR was a hot stock and then got killed, right? Because there were no profits. You know, I'm saying even profitable companies correct, but these companies, they're not even near, they can't even sniff profitability. They're nowhere near profitability. Right? Maybe Irene is closer to crazy. I think Irene might be one of the few profitable ones. But maybe Oklo is closer to profitability than some of the others. You can't tell me that 500 stocks are PLTR. You know what I mean? Like the AI names, that was the second part of, like, remember I broke up the market into 3 markets? PLTR is in that first tranche, in my opinion. It's not speculative penny stocks, Even Hood is in that first market. Growth, quality, profitable growth, where earnings are driving those things. Yes, they have gone up a lot. Yes, their multiples are extremely high, but that second speculative market, they don't even have multiples. The majority of them don't even have revenue. That's where the heat is. That's where all the heat is. Okay, you take that second market that I mentioned earlier, the speculative market, out of the equation, and you wouldn't have anybody talking about 1999. Yeah, I mean, Cypher's enough. I mean, Tobias, there are literally, honestly, hundreds of these things. And every single one of you probably have a favorite. Okay? Right? And I'm not saying you in particular, Tobias, but you get the, not Cypher. No. Cypher's going to 100. No, not Irene. Irene's going to 200. No, not Oklo. Oklo's going to 200. No, not Hut. Hut's definitely going to 100. Are they all going to 100? Are they all? If they all go to 100, you're going to see a magnificent crash in these things. You're going to see a magnificent crash. It's the inevitable. So, but again, the point I'm trying to make is that this is where the risk is, in my opinion, right? The risk of a March 2021 type high in these type of names. Like everything else, I don't put in that same category. And that's even some of the large caps. The large cap, mega cap names. The majority of them have been actually consolidating of recent. Yet AMD catch news. That was an outlier. You know what I mean? Like Microsoft's been dead money. Hasn't done a thing here the last couple of months. It's the zero revenue names. All the names that we love. That's what I'm telling you. I love them. To me, there's nothing better. We talked about this before. If I could buy $1, $2 stock, liquid as the Atlantic Ocean, trading millions and millions of shares, why would I want to buy anything else? Honestly, I can't. I know you guys do. I can't. You know, when I look at it through a risk perspective, I don't care what you tell me about so-and-so going higher. If I could buy a $1 or $2 stock, liquid as the sea, that may go even 4 or 5-fold, because that's what's been happening. You know, that's what's been happening. So I'm telling you, I love these things. And I hope this is not a March 2021 major high. I hope they go into digestive mode. And I hope, you know, some of them break out. And like we said, when they break out, there's going to be more names, newer names that are involved, right? Because if you remember, you recall some of the conversations we were having in the past. If this AI thing has legs, right? Remember what we said? It's going to start to spread its tentacles into other areas, other things. Okay? It's not just going to be Avgo, Microsoft, and NVIDIA that carries this AI trade forward. Right? You're going to see it spill into the underbelly, right? From mega cap to large cap to mid cap to small cap, and now we've been seeing it in micro cap. You know, so maybe this AI thing is as big as everyone's making it out, and maybe there's still, like some of you believe in the Irene longer term. Maybe there's just some healthy consolidation, digestion ahead, and there's another move, another leg higher. What I'm saying is that no matter what, whether bullish or bearish, the risk of some digestion, consolidation, retracing in these things has gone up significantly here. And I think the risk keeps only getting bigger the longer we go without seeing it. Right? Because obviously, the more you're reeling in long exposure, and the more you're going to have more people sitting in long exposure that they watch go up every day. Yeah, drones, right? That's another one. Yeah. I mean, guys, it's everything. Look at this stock. Look at this. This was under $1, right? You remember, Tobias? Under $1. It's 11 now. 11 times this thing went from $1.90 to 11 in what? 2 months? Here's your circle down here. I mean, there's just so many. That's what there's so many. This is not. Look at this. You guys remember this? PL. How about this? What? University of Amy. Look at this. Do you realize the move here in the University of Amy over the last couple of weeks? Look at this. Oh, Rigetti's insane. Insane. You're telling me all these what are these? These all are going to become blue chip. They're all the next NVIDIA. You know, how do you value these things up here? Based off what? Oh, we didn't even talk about the mineral plays, which we felt was one group that probably had some decent life to it because it was like a newer group, right? Because it was just this thing they were buying. That if we see some mineral names show up, new names that sweepers are attacking, all right, that'd probably be a great group to get a piece of. I mean, these stocks are insane, some of these stocks. Where's the, look at this UUUU. Look at this. Here's the thing, right? Here's the difference between now and 99, okay? In the 90s, what you had this where the small speculative names did their thing, They had a crazy run, and then that bull run was over and done with. They went dead. And then what happened in the late 90s, okay, I think right after that, the 98 correction came, the overall market. And then the late 90s, what you had was you had these larger names now that were doing this. So think of here, right? A name like this, AMAT, right? Going to $600, splitting 2 for 1, and then going back to 600 in a month. That's what was crazy about the 90s. That you had real companies, right? Big, I should say larger cap companies running, splitting, running again, splitting. You understand? And then what happened? You had the IPO market, where the IPOs that came out, internet IPOs, they would just go bananas and then eventually crash. Here, you don't have that. You have that selectively. Like AMD caught news, you get a big pop. But, AMD didn't go to 500, split 2 for 1, and then go back to 500 in a couple of months. AMD over the past year is barely up. It's barely in the green. You understand? It's these zero revenue penny stocks. That's what the sizzle is right now. Yeah, exactly. You had one stock, NVIDIA, right? That was the one stock. And granted, the mega cap names, okay, the Max 7 names, they had a 99-esque type move a little bit, okay, but then they went dead. They went dead. You understand? That 90 stretch from coming out of 98 correction all the way to March 2000, they literally were ripping highs and splitting all over the place. All over the place. And then you had IPOs come out. They were priced at 20. They would open up at 100, and then they'd go to 200, and then they go to 400. You understand? That was the craziness. This is, existing micro cap names that just based on what sector they're in, going bananas. Like you had a little period in the 90s, I remember, where you had some garbage names add .com at the end of their name. You understand? So instead of Dog Shit Incorporated, it was dogshit.com. And the stock had a rip for a couple months. But it didn't last that long. It didn't last that long. But the late 90s, it was the size of the companies that was crazy. The price action, the movement. These smaller names are easier to move because you got shorts that have been shorting these names for years. I mean, you look at these names. Let me think of one. What's one that Aqua's fairly new? I'm trying to think of one that hold on. Let me think. No, this is fairly new too. Oh no, here it's coming out. No, this is fairly new. I'm trying to think of like some of the existing names out there. But you look at a lot of these charts and they were trading at $150 once upon a time, and now they come from 2 and go to 10, Like I don't know, are some of these names newer? Yeah, this is new. Oh no, the charts just like these names have been around a lot, yeah, there we go. There we go. See? So you kind of had like shorts hanging out in this thing forever because this thing's been dead money since 1980. From 1980, it hasn't made a new all-time high. And now you get some buying because it's, I don't know what news. And you get these shorts getting squeezed to death in these things. Yeah, like Teledoc is fairly new. I'm trying to think of some of the winners, some of the bigger winners that had, but basically this type of look, this type of look. So anyway, again, I know I'm stating the obvious here in these things, but you got to be really. Listen, I'm going to be really, really, really careful. I love trading these things. They've made my next 10 years the last few months, all kidding aside. So I got nothing but blessings for all these names. But I'm obviously going to be really, really careful in any new risk, especially that I'm holding on to at this point in the cycle. Yeah, these are fairly new. I'm talking about like some of the new hot AI names, or let me think. I just saw a bunch of them and I can't. Yeah, like this shit is what I'm trying to say. Now this is fairly new too, though. This is new. This is not what I'm talking about. Let's see. I can't keep track of them. There's so many of them. How about this? Did you guys see this? Look at this. TMC. Look at this. Now look at this thing. All right? So you went from 50 cents to $10 this year on no revenue. Goose eggs. Do you hear what I'm saying? No revenue. Now, what are you going to tell me? They're going to start generating revenue? That's what justifies this stock price? Yeah. And some are better than others, but they've all gone bananas. That's my point. All of them. All of them. And there's I always draw blanks on these webinars. You should just look at stocks like I traded on my thing here in the past. Yeah, and there, you guys, that's what I'm saying. There's nothing wrong. There's nothing wrong participating and making money. In my opinion, that's a must if you're an equity player. Obviously for obvious reasons. You're not going to find these type of returns anywhere on the equity side. On a risk reward basis, again, you see options go from 2 to 20, but you're risking everything you're putting into that option. You understand? And you got to predict not only the direction, but the time it's going to do it by. Here, you've had 1, 2, 4, 5, $10 stocks that have minimum up 200%, right? And what was the likelihood that $3 stock was going to go to zero over the next week? Very unlikely. So on a risk reward basis, there's nothing better. But that's gone now, is my point. You understand? You can't make that argument now for HUT at 50, right? Maybe HUT goes to 80. But what's your downside on HUT now if the air comes out of these things? That's the point I'm trying to make. Right? I love HUT. I still have some HUT. But the stock is $50, not 10. So it's a big, big difference. Big difference. Yeah, even the weed stocks are moving. What? They're in play too. It's a speculative fever, and it's all fine to take advantage of. But at some point, right, when it gets long in the tooth, and it's pretty obvious when it gets long in the tooth, you might notice it a little bit earlier than you would like, so you miss out on some upside that's left, but that's fine. But that's fine. Yeah, I mean, come on, weed stocks, I don't know. I played this VFF. That's the one that caught the best action, in my opinion, and I sold it. I'm out of it already. You know what I mean? But here, 40 cents to $4. And believe it or not, the fundamentals on this thing aren't that bad compared to some of the others. But that's it. Like, Papu, any of these names, if they keep hitting new names like they've been, I'm going to play them. First, I'm going to try to day trade them. If I don't really get enough of a push day trade, I might hold it for a follow through the next day. But generally, that's the extent of it. That's the extent of it for me right now. That's the extent of it. The easy money, the sweet spot in these things have come and gone. The crazy risk reward in these things has come and gone. There may still be some reward left, but the risk has gone up significantly. Significantly. So that's where I think we're at right now anyway, regardless. Going into earnings season, going into OPEX week, I think it allows us to have a few weeks here to see how this all shakes out. And, is there opportunity in everything else? Just like they came after all these names aggressively, right? If they come after other things as aggressively, that's our sign that opportunities are opening up elsewhere. If they don't, and we just see these same names continue to lead the action, that's telling us to be careful. Right? That's telling us to be careful. But again, if trading wise, we could still trade. You just want to be nimble. Right? So we were kind of talking about, because of this low correlation, if you remember a couple of conversations we had, if something is at a decent risk reward spot, we all have different preferences spot wise. But what I mean by that is something that doesn't look like this, doesn't look like it's been running for 3 straight weeks up in a straight line. Right? You see some action in it. For a trade, it's still worth it. For a trade, it's still worth it. I think the tough part now with the flow is going to be you have OPEX next week and you have earnings, right? I think, again, Meta was a perfect example of that. Meta, Again, Meta catches action. I rarely put Meta action on the top bet list. You STEAMROOM members know that. But, it caught decent action. So it happened to be at a spot where the stock came down to a downside niner, right? And if you trade that name, it was worth a play. I don't know what their earnings are going to look like. It's got nothing to do with it. Again, if you trade these names, if you're solely an equity player, it's obviously not worth it. Where's the Meta action that I put on the top bet list here? It was last week. These are it, right here. October 24th, 700s. Here. And caught a nice bounce today. Again, I don't know. Is it worth it? It may not be worth it to some of you guys, Another larger name that got bombarded yesterday was that ARM. Not at as nice of a spot because it's been moving a little bit. We've seen an uptick in ARM buying all last week, but yesterday was probably the best buying of all that bunch. It was so aggressive. You know, again, already there was a trade out of it. If you ask me, maybe it goes higher. I have no idea. There was a lot of buying in it, but look, you see how it closed pretty strong off that action. Look, so you're talking about what, $8 to $10 rip in a day? Again, it's not a dollar stock, a $2 stock going to 50. You know what I mean? But it's a trade. PayPal, yeah, a few people in the steam room caught it. I'm not the biggest PayPal fan because it's just always a tough trade, but it worked out. It worked out. The only bullish argument I would make, it was that it was at a decent spot, right? Here now, I wouldn't chase it. You got earnings coming up, so you're running out of room here. Unless you want to hold it through earnings. I mean, that's an earnings bet now. But I think if you played PayPal, you got a trade out of it, right? I think a couple guys on the Sunday webinar were talking about RKLB for a trade on the breakout. That worked out. Again, not my cup of tea all the way up here. This is another name, by the way. We didn't even talk about this name, Sahil. I traded this thing at $4 the first time I bought it. $4. And it's not the only one in the group either. ASTS, look at this. I didn't even know it did this week. Look at this. ASTS is $90. Good God. My God. It's insanity in these things right now. Insanity. They do $1 million in revenue. $1 million. Now, shit like this happens with companies that don't have fundamentals. It rarely lasts. I remember when this thing was going bonkers, there was some nice sweeper activity. We made a lot of money in this thing. Look. Oh my God, because of the reverse split. It's showing it $1,200 because of the reverse split. They had to reverse split it. That's how much this thing got crushed. Goodness gracious. And again, God forbid this goes south. It's going to be a big, big problem for these things. And I'm not wishing it. Trust me, I'm not wishing it. I'm not wishing it. And I heard today we were introduced to this. Oh, where'd it go? We got a meme stock ETF. How great how beautiful that is, huh? Yeah, right, Hank? So, but this is where all the heat's at. This is where all the heat's at. You want to know if you're bullish on the Fed and rate cuts and all, where the opportunity is going to end up being? It's going to be in stuff like this. But look what this is acting like. Right? Suppose you're getting Fed rate cuts. Look at this. This is not acting right. Look at this. Hell, these aren't acting right. It's pure speculation. It's the speculative stuff. Gold, I mean, that's in a league of its own. I don't even, I can't even offer any input in gold. You know, I have no idea. I have no idea. Honest to God, I don't even know what to say. You know, you make the argument over debt being a problem, and that's not bullish for equities. Yet you have equities for it. You know, the dollar, maybe the dollar. You know, but keep an eye on the dollar. If the dollar continues to rally here, maybe that poses a problem. I don't know. You know, I don't know. Yeah, I mean, this is like, see, if we saw some quality longer term buying in a name like Home Depot, that's possibly the stuff that I would put on to hold. You know, because again, you know, my question is, if you get a market pullback, what happens to a Home Depot? You understand? Does it go lower with the market? Maybe it holds up better. That's kind of, you know, in the way of my thinking of buying it longer term. But if they come after it, you know, if we see some leap buying like we saw in some of the other stuff, I definitely consider. You know, but that's what you got. You got different worlds at play here. That's why sentiment overall is in check. You know, you look at the speculative names, you would think it's a complete mania. Sentiment's breaking the ceiling. But kind of a lot of this positioning and sentiment measures are really tame. That's because the economy's blah outside of AI. And, you know, a lot of the old school sectors of the market haven't done a thing. You know, now they've been picking up a little bit, right? We saw a little bit of flow, and Alcoa has been moving. The healthcare, which has been abomination, had a nice bounce finally, right? UNH and stuff like that. But even for small caps, like I know a lot of you think, because you guys know I'm bullish small caps, and I'm still bullish small caps. What we're seeing in micro caps is not why I'm bullish small caps. Like that's not even part. Is not even a part of my bullish thesis. You know, small caps are part of that rest of the market that's kind of been ignored for a long period of time, that I think can benefit tremendously. Right? So that's why I make the point, even the speculative things that have gone parabolic, even if that bubble pops, I think this has nothing to do with everything else that we've talked about. Yeah, that's another decent looking cyclical, right? CENX. Oh, I was making the point that when the small cap, if the bull market, the bull trend continues on, what you're going to see is smaller cap price names. Okay, they're not going to be $1, but you know, they'll be 10, 15, 20, 30 bucks, but they got some fundamentals there. You understand? Like post 2000, that rally I keep talking about to you guys about that big small cap bull market, it wasn't names like we're seeing now. They were like, I remember vividly, like a lot of the small cap names that I was participating in, they were profitable names, you know, or they had crazy growth and they were going profitable, that type of shit. You know, what we're seeing here is just speculative hype in micro cap. Yeah, banks, right? Banks have been, you know, they've just been quiet. They've just been like very constructive consolidation, market terms. You know? How about this? I mentioned it in STEAMROOM. They're acting like normal stocks, these things. They're acting like stocks would act. You have a run, you digest, you have another run, you digest, you get a little pullback, right? That's how stocks normally act. real stock. You know, and over time, you got a nice, healthy uptrend. Not in a matter of 2 months, you go up 100-fold. So there are a lot of areas of this market that if you get that kind of that real bull to show up and sentiment starts to shift, consumer sentiment, stuff like that, you get retailers, smaller cap, mid cap retailers, even parts of tech, even parts of AI tech that have real fundamentals to them. Like we've seen quite a few of them that you guys like a name like this. What happened? Hello? Oh, God. Hello, right? Like a real company, right? Couple $100 million in revenue, growing at 30%, profitable, growing at 50% quarter, right? So you got this explosive growth, real profitability. This thing was a $30 stock, $40, $50 stock. Now it's $150. But these are real companies. They're not just story. These are real names, real fundamentals. Yeah, HIMS, I don't really follow that too much. HIMS. I played it a couple times before it got crazy back here. But since it's been up here, and I feel like there's news on it every day, I don't really fool around with it much. Oh, but even a name like this, right? I'm giving examples of potential breakouts with flow that can emerge from a bull market in small and mid caps. Again, this is nothing yet. Like this, I think was the trade, right? This was the trade that small caps would at the least get to a new high. That was the trade, right? Because based off positioning. I think the bigger trade is that you get a bull market in small cap. All right? That's kind of the big picture trade. Like it didn't even start yet, in my opinion. Like it didn't even start yet. Like look, small caps have been dead money since 2021. Completely dead. That's why maybe even some of these names that you guys like, after they correct and digest, the ones that are real or do become real, hang around. You know what I mean? They don't go up tenfold from where they are, but they still hang around and go up and go down and act a little more normal. But this is the big trade here. This. Busting out of that. So, and that would be great for us stock pickers, right? I have not seen a lot of flow in Costco, but I like the idea. Yeah, again, Costco was one of these kind of quality, it became a quality defensive name. So even though there was no growth in the economy, nobody really wanted to own any equities. It wasn't really risk on. Costco was being bought up aggressively. Why? Because they were growing even without the benefit of the economy, without the benefit of the Fed. And this happened. So I think what you're going through now is, again, normal. Right? Why is it normal? After a move like this, it can't keep going. Like I remember having that conversation with you guys regarding Costco. It might have been over here. Okay? But the point I was trying to make is that the probability that it runs into something like this at the least goes up even more if the stock continues higher, not less. Like this is total normal digestion. This is bullish digestion, right? The issue becomes how long does it digest a move like this, right? And that's where maybe sweepers can provide clues at times, right? Accumulation you look for. In the price action, it starts to look healthier. But, that becomes the question here. But this is totally normal. Like, look. You had this run, and then you had this consolidation, right? Like, it's totally normal. Yeah, Tobias, that's where the opportunity, I think, lies if this Fed starts a rate cutting cycle here. I think right now the market is telling you it's too early. I think that's why they're acting like this. But that's where the opportunity is, right? Because we all know what happens when how these housing stocks find the groove. They can put them up and put them down quickly, But you see the action in them recently, like they look like crap over the last few weeks. All right? And this is the tough part about the market, right? You see the indexes going higher, like we said, and you would think most of the stocks are going higher with it. That hasn't been the case. Like, look. But again, I think this is good if you aren't in them yet, because you had a really nice move here, and now they're coming in a little bit. All right. So I would look for flow in here, if you like them. That goes for all of these, like even Home Depot, because Home Depot is a quality name. All right. Like if you buy Home Depot off corrections, you've made a lot of money in your career. So, but yeah, in addition to small caps, these type of names, right? These type of names. Again, I don't know if the time is now, but that's where I'm kind of, I want to keep my eyes peeled on the sweeper activity, especially as we get through earnings here, right? And that's it, So again, in simple terms, I'm taking advantage of these next 3 weeks where I kind of lose my edge off of the flow for the reasons I mentioned, to take a step back, be a lot more nimble, even more nimble than I've been, and just be careful, especially in the stuff that I like to play, because it's gone up significantly, and then as coming out of earnings season, I'm always at my best when I let the flow do the talking, and I react accordingly. So in other words, a lot of times, like even when I'm selective, like recently, right? I'm not just buying anything that catches flow, even though I may like it, because I'm trying to be a lot more selective and be smart and careful at the same time. But they came in and tattoo a poet like they had tomorrow's newspaper. So I have to play it. Right? Now, again, coming out of earnings season, if it's in a name, in a decent setup, right, and they're tattooing it like that, I want to own it. I'm not looking for flow in that name. I wasn't looking at poet and looking for flow in it. The flow forced me into it. So that's kind of the approach where I'm at my best, and I kind of want to stick with here once we get through these next few weeks. But hopefully we get Sharpie data back, because honestly, that's a big thing for me. That's a big thing for me. Luckily, the market really hasn't done a whole lot just in a week or two. But, what's going on with this government shutdown? Anybody following it? What the hell is going on here? How long is this thing going on for? It's amazing the market doesn't even give two shits about it. Anybody have any news on that? Or it doesn't matter yet? Does it start to matter at some point? I have no idea. Saying 3-week shutdown. Ah. No. Again, just for me, and it's more on time than anything else. Perfect time to settle in here. My brain can use a break too after all the action that we've had over the last. I mean, the action's been incredible. No, like anybody who plays these smaller names, it doesn't get much better than what we've had here. It doesn't get much better than that. Incredible price action. And the flow too, just nuts. Absolutely nuts. Senate won't pass the spending bill. So when does it actually become a problem? It's got to be no. Oh, Columbus State bond market. Yeah, the stock market's open. I thought it was closed, but I saw today it's open. So when's the shutdown become an issue? Has anybody spoken about that time-wise? There's got to be a time, right? Like after so many weeks where it starts to become a problem and affect things in a big way? But betting markets have 20 days most likely. So maybe that's why the market really doesn't care too much yet. Because if it's that, it's not a big deal. But it's funny because I remember 2011, the market got its rear end kicked, but I think we caught a downgrade too. I think the U.S. got downgraded, if I remember correctly. So that was on top of it. But 2011 was a pretty vicious correction off it. Yeah, maybe. You're probably right. You're probably right. So again, if we continue to more of the same, I'm going to continue to trim some of the stuff anywhere I can. I'm okay even right now. If we get caught in a pull, I'm okay where I'm at. But if we go higher, I'm going to use it to trim a little bit more. And then if we do come in, obviously, I'm going to be looking for opportunities and look at my chops. But I think the problem is a lot of other people will do the same. So how much of a pull will we get without some sort of major shock? We'll see. Yeah. I don't know if you were here earlier on. Again, there's a little bit of divergence there that more on the swap side than spreads that I'm keeping an eye on. Right here. Yeah, it's pretty noticeable though. I mean, option flow, it depends. Like, I mean, there's a million services where you can get just flow. In other words, you just want straight option flow. Yeah, I saw even like some of the high yield stuff too, right? Getting hit. Just starting to get hit anyway. BXSL. Let's see, BXSL. Ah, interesting. So yeah, again, definitely keeping an eye on it over the next couple of weeks. While I calm down a little bit here. Yeah, LYD. This is what I look at throughout the day. LYDIEF and HYGIEF. So you see, you got a little divergence there too. Look. You know, but so it depends, right? The larger divergence, see, like here, you had a little divergence, and then you got the quick washout, and then that's it. It resolved. It becomes a problem when you get these longer divergences like this, and then you get whoop, right? So definitely keeping an eye on all this stuff. Like I said, over the next couple of weeks, next few weeks. Owl, that's a financial, right, Papu? I mean, right now, everything, Papu, you got earnings season. So, I mean, do you want to play earnings? Is that what you're looking to do? Let's see what this looks like. Owl. Oh, this is a private equity firm, right? That's why it's got hit recently. Yeah, I don't know. You know, you got earnings here. So I would probably wait to see what earnings look like. You know, that's on the end of the month, October 30th. But personally, I would wait on that. I wouldn't buy into earnings. You know, see what the reaction is. And yeah, I know. I heard recently when they all got hit. There was another one. I think this one, right? ARES. Yeah, look. But again, you know, nice pullback can end up being nice spot. So if we see some flow show up post earnings, maybe an opportunity. Oh, KKR, right? KKR. Yeah. Yeah. Interesting. They look a little oversold here at the moment. But I would wait for after earnings, you know, because again, the only way I would buy them is if they catch sweeper activity, and it's got to come after earnings. You know, I don't really pay attention into earnings, but spot wise, I like them obviously because they're off a pullback. You know, now they just need some flow. Yeah, BX. Yeah, I saw. I saw when they were talking about them about a week ago. You know, they had some news. They had some news. Yeah, so you got, you know, private equity, you got housing, you got a lot of stuff that hasn't participated here. A lot of stuff. Even financials have been quiet. This is the problem. You know, see, you take micro caps out of the equation. In other words, you take these small little names that we've been playing and finding success. This market's been a lot trickier. A lot trickier. This is not ideal. You know, like just as a big picture frame in mind, I don't like getting aggressive and buying stuff on a longer term, intermediate, longer term basis with this down here. You understand? Like where I want to be most aggressive is when these things, when this pops and then unwinds, right? Like that's where you get the biggest bang for your buck. So kind of like we got the correction, you got this huge pop in correlation, and then once everyone's bearish, a floor's put in, right? You start to see bull flow. You got a lot of runway here. From here all the way to here, you got a huge tailwind. So here's where I like to start tucking stuff away, right? So I like to buy little pieces of things and just hold it. You know, just put them away. That's kind of the stuff like I've started to sell. Here, I don't want to do that. You understand? Why? Because this is coming at some point, right? Now, it may not be as big as that. It could be even a smaller pop, but it's still going to end up being a rinse, right? In equity. So, and on top of that, you see the dispersion in the market. Right? I've been I mean, you guys are probably don't want to hear it anymore. I've been talking about it so much. But you get this randomness. Right? Again, take the speculative stocks out of the equation right now. Right? So all these hot spec names, just pretend like they don't exist. The rest of the market, think of what you got. Okay? You got one Mag 7 up, one Mag 7 down, one semiconductor doing well, the other semiconductor not. Right? Housing stocks trading lower, bank stocks choppy, private equity stocks trading lower. You understand? That's what you get with this. That's what you get with this. Where here, you get sector movement, broad movement, right? So if the financials are doing well, all the financials are doing well. If the semis are doing well, all the semis are doing well. So, for me, guys, this was a must. Like, I have to acknowledge these things. You understand? Without looking at this stuff and paying attention to this stuff to manage my risk, I ran into a brick wall every single time. And that could get really frustrating. Okay? I told you guys many, many times, that was my biggest, the hurdle that I had to overcome, is that giving back all my profits. I always used to make a shitload of money when the market was bullish, but as soon as it got tricky, I used to give it all back. So paying attention to these things, to managing the risk profile, has helped me significantly. Without it, I'd just be firing like I would on any given day. But you see now, like, you got speculative names on fire. Right? You can get away with it while that's happening, playing those things. Nobody wants to hear this from me, right? Go shut up with this correlation shit, right? Because you can hide out in these speculative names right now and make money. But the next cycle we run into, when something like that's not around and they're firing like they would in any other market environment, they're going to give back all their money. It's more stuff to follow, more of a pain in the ass, but for me, it was a must. A must. All right, my friends, I'm going to wrap it up. What time is it now, anyway? 6:30. My Yankees are done. Hockey season's here, at least. But that's about it. Another week has gone by. The weekend's here again. Before you know, it'll be Christmas. Yeah. Oh, go Dodgers. At least you get some action. Yeah, I'll see you guys mañana. All right. So yeah, we just stay nimble next few weeks. With the flow, we lose the edge out of the flow. But we want to keep our eyes peeled on some of the stuff we were looking at today. All right. For those of you not in the Steam Room, have a great rest of the weekend. And you Steam Room members, I'll see you mañana. Have a good night, everybody.